Right, let's give you a sense now of the latest in the world of business. Local markets are in need of gains this morning after a weak close yesterday. The JSE closed marginally down, marking the second day of decreases as weaknesses in heavyweight resource-linked sectors and tech stocks more than offset gains in financials. Now, Chief Investment Officer and founder at Makwe Fund Managers, Makwe Masilela, joins us now for a deep dive into the world of business. Makwe, very good morning to you. Thank you for your time. Give us an overview of how the local index and the rand are faring so far this morning.
You know, we opened in a negative just like our international peers, and all because of these worries that we've seen that Japan itself fell into a recession, and as a result, they are no longer the third largest economy in the world. They've just been overtaken by Germany, so they are now occupying the fourth spot. And later, just after the session started, we also saw the UK also managed to fall into a recession, and markets are still driven by the fact that how soon will interest rates be managed to be decreased. And that continues to preoccupy us, as much as some of the data indicate that it's not going to be anytime soon, but markets are still hopeful that they will still be reduced. And the minute you see interest rates still at elevated levels, and that gives a boost to U.S. assets, and as a result there will be some demand when it comes to the US dollar for people to continue to buy those assets, and that will work negative towards the likes of the rand.
South 32 has published the 2024 half-year financial results. What do those latest moves look like?
Not looking great. Revenue down 15%, dividend per share down 96%, and then profit as headline earnings per share down 90%. That itself is a reflection of low commodity prices, of low production when it comes to coal, and that's despite them having some record production when it comes to alumina, and also being able to realize lower prices when it comes to their input cost. But the guys managed to reach some milestone as they triggered a lead zinc and silver mine in the US. And that's in line with their strategy to be able to focus on commodities which are all low when it comes to carbon future. But unfortunately, that demand itself, the estimates thereof are much higher than initially thought, all because of high prices when it comes to steel, cement, and some electrical components.
It also looks like property stocks are slowly coming back into favor. Property groups are starting to claw back the 230 billion rand in lost market value. What's going on there? Are we seeing a similar trend in the residential property side?
Not really a similar trend, and looking into the property stocks, the commercial ones, you see that even last year they were the best performers compared to our points or equities and cash, but we know they've been struggling for years, all because of the issues of recession, all because of the issues of the slow economic growth, and also COVID exacerbated the situation. But now lately we start seeing some footfall, and then as a result we think that they're going to start picking up, and provided the economy starts also doing much better so that people can continue going shopping. And when it comes to the housing market, unfortunately, we've seen the prices in January, the growth thereof moved sideways, that is unchanged from December. And because we can see that when it comes to the supply and demand of residential properties, they've gone down. So the volumes are down almost 28%, and all because of the obvious reasons. Affordability continues to be a big deal here. And unless if we start seeing interest rates going down, we see inflation pressure starting to go down as well, then probably it might start picking up. And not forgetting that other areas when it comes to the residential market are doing better, the likes of the Western Cape, because of migration.
And Makwe, Heineken, the owner of Savannah Ciders, has now written down the value of its local business by 10 billion rand. Help us make sense of those developments, and what does it now mean for shareholders?
It was anticipated, and the reason we are seeing that is that the guys, you can say, they forced the deal. They struggled to get this deal to be approved, either by shareholders or even by the competition authorities. So it's not surprising that the cost of doing that deal was just so high. And then at the same time, you get a consumer which has more choice, who also have some restraints when it comes to their income. And we've seen that their volumes, not just back home here, but even in the likes of Nigeria, Vietnam, have been going down, even internationally as well. The beer market has not been doing that great. Hence, Heineken wanted a deal like that with the likes of Distel so that they can continue to diversify themselves. So yes, high cost back home here, lower volumes, lower demand is affecting the whole thing. Then if you have to write down almost 10 billion. That definitely is going to have a negative impact when it comes to shareholder earnings.
Absolutely. Thank you so much, Makwe Masilela, who is Chief Investment Officer and founder at Makwe Fund Managers, giving us a sense of how the latest in the world of business is looking like.